The agreement shall not be binding on the board as if there is any changes in the crucial assumption or a failure to meet the conditions subject to where the agreement has not been entered into. The binding effect of the agreement shall cease only if there is a party has given value to notice of concern to other parties or the parties. In the case there is change in any of the crucial assumption or failure to meet the condition or subject to the agreement has been entered into, the agreement can be revised or cancelled or can cease to be seized, case may be. Furnishing the annualized complaints reports of Section 10O, the PASSC shall further the annual complaints report and quadruplicate the prescribed form of the Director General of Income Tax and International Taxation each year concerned with the agreement 30 days from the due date of Income Tax Act the previous in the return of the year or 90 days from the entry into the agreement whichever is earlier. Complaints about an agreement. Transfer pricing officer having a jurisdiction over the association carry out the complaints audit agreement of each of the year covered the agreement for the purpose of transfer pricing officer may require associate to substantiate the complaints with the terms of arrangement, including satisfaction of the crucial assumption, correctness of the supporting document, supporting data or information, or consistency of the application of transfer pricing method. The assessee submit the information document to establish the terms of the arrangement to be complied with. The complaints audit report shall be be furnished by the transfer of officer within 6 months of the end of the period in which annual complaints report is revised from the transfer pricing officer. Revision of an arrangement, section 10Q. An arrangement after entered can be advised on the board either suo motu or request of the assessee or a competence authority in India, Director General of Income Tax, International Section if any. There is a change in the crucial assumption or failure to meet the conditions subject to which the arrangement has been entered into. There is a change in law that modifies a matter coverage by the agreement but not the nature which enter the agreement to be non-binding. There is a request from the competent authority in other country requesting revision of an arrangement in the case of bilateral or multilateral arrangement. Except when the agreement is proposed to be revised or request to be assessed, and the agreement cannot be revised unless the opportunity is being heard or being provided assessee and assessee in the agreement with the proposed revision. The revised agreement shall include the date in which original agreement is applied and the date on which a revised agreement is applied. Cancellation of the agreement, section 1210. The reason shall be cancelled cancellation on the board of for any of the following reasons. The complaints audit as a result of finding an or failure or any part of assessee in compliance with terms of agreement. Assessee is failed to file the annual complaints report in time. The complaints audit annual complaints report is furnished by assessee contains material errors. Assessee is not in the arrangement with the revision proposed to be arrangement agreement in cancelled told and or more shall give an opportunity being heard in assessee before the proceeding or cancel the application. The order of cancellation of arrangement shall be returned and shall be provided reason for cancellation or for non-acceptance of assessee submission, if any. The order of cancellation shall also be requested as effective date of cancellation agreement which are applicable. The order under this act declared in the agreement is void ab initio. The account of fraud misrepresentation of fact shall be returned and shall be provided a reason of the declaration and non-acceptance of the assessee satisfaction if any. Mere filing of an application of agreement under this rule shall not be prevented under the operation of the X Act and determine the arm's length prices of the chapter till the agreement is entered into Rule 110T1. The negotiation between the competent authority in India and the competent authority of other country or countries causes a bilateral multilateral agreement and shall be carried out in accordance with the provision of the tax treaty between the India and other countries and countries 10T2. Provision of the rollback of advanced transfer pricing schemes, section 92CC90, in order to reduce the current pending as well as the future litigation, section 92CC provide the further rollback mechanism APA scheme. According to APA, under subject to the prescribed conditions of procedures and manners provided by phone, the APA is a specified manner and the APL is a determined relationship to multinational transactions entered into the person. Income is referred in one or a specified manner which said the income to be determined as necessary attributable to the operation carried out in India on behalf of a person being non-resident. During the period not exceeding 4 previous years and preceding first of the provision and which a advanced transfer pricing applies in respect of the international transaction undertaken. The CBDTs and notification 23-24-25 stated that on the March 14, 2015, exercising the power of conference 92C 95 90 read to section 295 notify the following condition. The procedures and manner determine the arm's length price of the specified manner which arm length price is mentioned determine result of the international transaction. Rule particulars, condition, procedures and manner of the determination of arm price. Rule 10FBA, procedure, definition of application. Condition, a person who has made an application. Rule 10F definition of rollback year. In a previous year falling within the period not exceeding 4 previous year. Proceeding of the first of 5 consecutive years and refer to section 92 CC. Rule 10M. A rollback of the agreement. Provide the rule provided following. Agreement may be provided for determining the arm length price and specific the manner in which arm length price shall be determined relating to international transaction entered into the person during the rollback year. Herein refer to rollback provision. The condition for applying a rollback provision. The agreement shall contain a rollback provision in respect of international transaction subject to the following, namely, the international transaction is same as the international transaction in which agreement other than rollback provision applies. The return of the income from the relevant rollback years has been furnished by the applicant before the due date of specified explanation to section 131.1. The report respect to the international transaction has been furnished in accordance to section 92A. The application of the rollback provision respect of the international transaction has been requested by the application for all the rollback years in which said the international transaction has been undertaken by the applicant. And the applicant has made an application seeking the rollback of section 3CDA accordance with the sub-rule 5. Non-applicability of rollback provision. The rollback provision shall not be provided in respect of international transactions or rollback year. The determination of arm length price of said international transaction for the year must be subject to the appeal before the appellant tribunal, and the appellant tribunal pass any of the order disposing of the appeal at any time before the signing the agreement. The application for rollback provision has the effect of reducing the total income or increasing the loss, and the case may be application is declared to be a return to the income of the city. The manner of determination of the arm length prices is the same as a rollback year and other previous year, where rollback provision specify the manner in which arm length prices can be determined in relation to the international transaction undertaken by the rollback year. Such a manner shall be same as the manner has been agreed to be provided. Determining the arm length prices on the same international transaction undertaken in any previous year in which the agreement of price and has been rolled back. Time limit for filing an application for rollback provision. The application may further furnish along with the application for the advance prior transfer pricing a request of rollback provision section round number 3 CEDA with the proof of payment of the additional fees of 5 lakhs rupees. Rule 10R. Procedure for giving effect to the rollback provision of agreement. Rule 10R lays on the procedure to give the effect of the rollback provision of agreement follow. The application shall furnish a modified return of income referred to section 92 CD in respect of a rollback year in which the agreement applies along with the proof of payment of any of the additional tax arises in the consequence of the computation in accordance with the rollback provision. The modified return in respect of the rollback year shall be furnished along with the modified return to furnish in respect of the first previous year in which agreement has been requested of the foreign application. If any of the appeal filed for the application is pending before the commissioner, appeal and tribunal or high court or the rollback year, or the issue which is subject to matter rollback provision for the year, or sent appeal to the extent of the subject to covered under the agreement shall be withdrawn by the application before garnishing the modified returns a year. For the applicant, the appeal filed by the opposing officer, principal commissioner, commissioners pending before the appellant tribunal, high court rollback, such issue is subject to matter of rollback provision of a year. And the appeal is extended to the subject of award under the agreement shall be withdrawn by the assessing officer, principal officer, commissioner. The case may be within 3 months from the date of modification of the application. The application assessing officer or the principal commissioner, the commissioner shall inform the dispute resolution panel or the commissioner or the appealant authority or a high court, or the case may be the case of agreement contain a rollback provision have been entered into along with a copy of the same as being practiced to do so. In the case of effect cannot be given to the rollback provision of the arrangement, and in accordance with the rules or any rollback year in which applies, the goods accounts failed on part of the applicant, arrangement shall be cancelled. Subsequently, the notification rule, CBCT issued circular 10/20 dated 10/6/2015, adopted questions and answer format of clearly certain issues along with the rules. The questions are raised and the answers being said the circular given under the Rule 10 MA 21A, when the condition of the return of the income for the relevant rollback has been furnished by the applicant before the due date specified in the explanation 2 of 139.1. It is not clear to whether the application who has filed return in section 139.4, 135 Act should be eligible for rollback. The return of income under section 139.5 shall be filed only when the return under section 139.1 has been already filed. Therefore, the return of income under section 139.5 of the Act replaces the original return of the income filed in section 139.1. Hence, it has been returned which is filed in section 139.5 is revised the original return filed before the due date and specified under section explanation 2 of explanation 1 of 139.1. Applicant would be entitled to rollback of the revised return of income. However, the rollback provision will not be applicable in the case of return of income under section 134 because its return is not filed before the due date. The belated return section 139.4 cannot be revised under the section 139.5 in the case the revised return would be replaced the belated return. Therefore, the return could not be entitled for a rollback provision on the revised return when the replaces the related return. Rule 10 MA2 mandates a rollback provision apply in respect of the international transaction. Namely, international transaction in which agreement other than the rollback provision applies if not clear. The meaning of the word same. Further, it is not clear whether the restriction is applied to the function of the assets or risk analysis. The international transaction may be the rollback provision is allowed should be same as proposed to undertaken the further years in respect of the agreement has been reached. And there cannot be a situation where the rollback is finalized and the transaction cannot be covered in the agreement in future years. The term used in international transaction implies that transactions rollback year has been the same nature and extent in the same of associated enterprises. The proposed to be understand the future year in the respect of the agreement has been reached. In the context of a FAR analysis, the restriction should be operated to ensure the rollback provision is applied and only FAR analysis. The rollback year does not differ material from a FAR validate to the point of reaching agreement in respect of the international transaction or understanding the further analysis in which agreement it is. The word material is generally being defined in advanced pricing period, being entered with the CBDT. According to the definition, one materially would be interpreted consistently with orderly defined and the manner this material changes of the fact and circumstances would be understood and the change would be reasonable having resulted in the agreement significantly different in terms and conditions. Rule 10 MA requires application of rollback provision in respect to the international transaction and made the application of all the rollback years in which the international transaction has been undertaken with application. Clarification required whether the rollback has been required in all the 4 years of application can be chosen the year on the block of the 4 year. Application does not have the option to choose the years in which you want to apply the rollback. The application has to either apply for all the 4 years or not apply for all. However, if there is cover international transaction does not exist, rollback here. There is some other disqualification rollback here. Then the application can apply the rollback for the less than 4 year according to the covers international transaction that are not existing during the any of the rollback year. The application can apply the rollback for the remaining year. Similarly, if any of the rollback year for the cover and transfer transaction, the application failed to test the rollback condition contained in the various provisions, then the will be denied for the benefit of rollback or rollback years. However, such rollback it is still applied to rollback. Rule 10MA states that the rollback provision shall not be provided in respect of international transaction rollback rule here in determining the arm's length prices of this international transaction. Satir has been subject to matter of appeal before appellate tribunal. An appellate tribunal has passed an order disposing such appeal at any time during the signing agreement. Rule 10RA provides any of the appeal filed by the appellant is pending before the commissioner, appellant tribunal, high court, or rollback here, or issue which subject matter of rollback provision are here. Said appeal to the extent of the subject to cover under the agreement shall be withdrawn from the application. There is a needed to clarify if the tribunal has passed an order disposing such appeal, order of mismatch or anything rule between Rule 10MA or Rule 10RA. Reason is not allowed rollback of international transaction for which appellate tribunal passing an order disposing an appeal in the ITAT, the final fact finding an authority. Hence, the factual issue, the matter is already discussed in final of this year. However, the ITAT is not decided the manner in and not set any aside order or fresh consideration matter of the lower authorities and full discretion of the disposal of matter and shall not be treated in one average the final. Hence, this beneficial rollback has been given. There is no mismatch between Rule 10MA and Rule 10RA. Rule 10MA3 provides that rollback provision is not provide the respect to international transaction. And the rollback here in application rollback provision has been affected reducing the total income and increasing the losses. In the case of the application desired to return of income once a year, it has been clarified whether the rollback provision such a restitution can be applied in a manner so ensured that the return of income or loss is accepted as the final income or loss after applying the rollback provision. Thus clarifying that the case of rollback provision certain specific agreement between board and the application does agreement determining arms and prices. The agreed means determining arms and prices subject to condition that arms and prices should be modified to extent it does not result in reducing the total income or increasing total losses. As the case may be, the applicant has declared the return of income said year, the rollback provision should be applied. For example, declared income of 100 rupees, the income is adjusted to TPO 120. The application of the rollback provision resulting of the reducing income to 90. The rollback of would be determined the manner in which declared income rupees 100 would be treated as a final income of the year. Rule 10RA states that any case cannot be given to the rollback provision of the agreement according to the rule and rollback year in which applies the account of failure of the part of applicants. Arrangement shall be cancelled. It is clarified to be whether the entire agreement to be cancelled or that year in which rollback fails. The procedure gives effect to the rollback provision laid in the Rule 10RA sub rules 2, 3, 4, 5, 6. The rules specify the action to be taken for the application order that effect may be given rollback provision. If the application does not carry out the action and the rollback yes, the entire agreement shall be cancelled. This because of the rollback provision has been introduced. The benefit of application of the person according to the rollback provision cannot be given effect to any of the rollback years and the account of the applicant is not going to take into action through 3, 4, 5, 6, the entire agreement shall violate and it has been cancelled. If there is a mutual agreement procedure, MAP and application already pending the rollback here, where would be standard of the advanced transfer pricing authorities. Further, it has been valued that advanced transfer pricing and the mutual agreement procedure has been concluded rollback here. If the mutual agreement procedure has been already cancelled and for any international transaction, any of the rollback of the year, rollback provision would not be allowed for the international transaction in the year, but would be allowed for the other years or the international transaction of the year, subject to fulfillment of specific condition. Rule 10ME and Rule 10R. However, the mutual agreement procedure, respect to the pending of any other rollback year, under the advance transfer pricing, upon the option exercised by the application, either the mutual agreement or the application of rule shall be proceeded for the such further. Rule 10ME provides the agreement to provide determining the harmonized prices and manner of determining AMP. However, the Rule 10M specifies the manner of determination of the MLP, which is said that the ALP term does mean the ALP should be determined. The harmonized price should be different from the different years. However, the manner of determining harmonized price, including choice of method, comparability analysis, test perpetuity. Will the complaints report for rollback would be a crucial assumption has been validated in the complaints audit. Since the rollback provision of the past year AMP as a rollback year should be agreed after the full examination of fact, including validation of crucial arrangement. Hence, the complaints audit of the rollback is primary to check the agreed price and methodology has been applied in the modified data. Section 10. Whether the application has an option to withdraw from the rollback application. Can the application accept the rollback result without accepting the advanced transfer pricing? Yes. The application has an option to withdraw from the rollback application even while maintaining the advanced transfer pricing application in the future years. However, it is not possible to accept the rollback result without accepting the advanced pricing in the future year. It may be also noted that fee specified in the Rule 10MA shall not be refunded even when the rollback application is withdrawn. It is already concluded that APA is a new advanced transfer pricing is signed and the rollback and years of advanced transfer pricing is reviewed. The second provision of the Rule 10MA provides a result of the advanced transfer pricing already concluded to be included in the rollback provisions. Any already concluded APA, whether the modified return has already been filled and the first year of the APA terms, how will the time limit for filling modified return of the rollback year to be determined? The time to be filed a modified return of rollback year is started from the year date of signing of the revised APA and incorporating the rollback provision. In the case of merger and companies where one or more of the companies in the APA application, how would rollback provisions allowed and which companies would be an agreement between the board and the person. Principle is followed in the case of merger and the person and making the APA application would not be entitled to enter into the agreement and entitled for rollback provision in respect of the international transaction undertaken by the rollback years. Other persons, the companies are merged with this person would not be eligible for the rollback provision. ABC merged into C and the application the agreement only entered with the C. C would be eligible to rollback provision. B would not be eligible to rollback provision. Illustrate that A and B merge from a new company and new company C and C is a after nobody would be eligible for rollback provision. In the case of a demerger, APA and one transfer pricing application or signatures into two or more companies would be eligible for rollback provision. And as some principles are mentioned in the previous year, the person who is method of the advanced transfer pricing procedure application entering into advanced transfer pricing would be able to entitle to rollback provision. Would continue to apply. Illustrate A, the person applies to the enter into the advanced transfer pricing, subsequently demerged from into A and B. Only A will be eligible rollback or available transaction covered under the advanced transfer pricing. B will not be existence in the rollback years and availability of the grant does not arise. The section 92 CD provide the following procedure to giving effect to APA. In the case of the person who enter into advanced transfer pricing prior to the date of entering into such agreement, Advanced transfer pricing. The further the return of income under the provision of Section 131 and subject to the assessment of the year as a resulting of the previous year in which advanced transfer pricing applies. When the person shall within the period of 3 months of the end of the month in which pricing has been entered into. And further, the modified return, notwithstanding contrary provision of 131. Such modified return shall be in accordance with the limit of providing APA and modification any of them made in the APA the return of fine. In other, provide that act shall comply and its modified return the return for 131 unless anything in the contrary to the provision of the section. If an assessment or reassessment procedure of the assessment year relevant to the previous year to which APA applies has been complied before the expiry of the period, allow the furnished modified return. The assessing officer shall the case of modified return filed in accordance with the provision of the section. An order of modification of total income, the relevant assessment year, determining the assessment reassessment. The case may be having regard to the order of according to APA. Instead of proceeding of the assessors and reassess the total income. Such order of assessment, reassessment, recomputation of total income shall be passed within the period of 1 year from the end of financial year in which the modified return is furnished. This shall apply to notwithstanding the period in limitation section 153, 153B, 144C. Appeal against the order shall be by the Commissioner. When assessment or reassessment procedure of the assessment year relevant to the previous year which YPE applies, pending to the date of filing and modified return, the assessment order shall pass the complaints with the assessment and reassessment proceeding in accordance with the APA, take in consideration a modification of returns furnished. In the case of time limit of completion of pending assessment or reassessment by mentioned under section 153, 153B, 144 shall extend to 12 months, the shall not apply withstanding the period of the limitation contains section 153 and 153B and 144. Assessment and reassessment proceeding of the assessment share shall be deemed to be complied. Therefore, an assessment and reassessment order has been passed. A notice of this issue section 143(2) within the expiry of the limitation period and provide satisfaction. A secondary adjustment on to see. Meaning of the primary adjustment, secondary adjustment. Primary adjustment, the transfer pricing applies determine the transfer pricing is accordance with the arm's length price as well, resulting in increase or total decrease in the reduction of the losses as the case may be assessed. Second adjustment means adjustment of the books of accounts as associate or an associate enterprise or reflect to the actual books of profit between associate or associate enterprises are consistent with the transfer pricing determine the result of primary adjustment and thereby remove the imbalance between cash accounts and actual profit of associate. The forms of secondary adjustment. As per the OECD transfer pricing guidance for the multinational enterprises of tax administration, transfer pricing guidance, second adjustment takes place in the forms of constructive dividend, constructive equity consideration, and constructive loans. Aligned with the economic benefit of transaction with the arm's length principles, the principle, the provision of secondary adjustments are international recognized and that already part of transfer pricing result in many leading economics of the world. The wisely is approaching a secondary adjustment of the individual countries varying from the international recognized method, aligning the economic benefit of transaction within the arm's length position. In the case of an secondary adjustment to be made, in the order of aligning the transfer pricing provision of the OECD transfer pricing international transaction, section 82E provide the assessee shall be required to carry out secondary adjustment under the primary adjustment of the transfer pricing. There has been a pseudo assessment to the return of income made by the assessing officer has been accepted by the assessee, determining the advance pricing agreement entered into the assessing officer section 92CC in respect of first April 2019 has been made as per the safe harbor rules framework of section 92CB as a result of the return of resolution of the assessment by way of mutual agreement procedures under the agreement enter into the section 1990 avoidance of the double taxation. No requirement of secondary adjustment in certain cases. Some secondary adjustment, however, shall not be carried out if the amount of primary adjustment is made in the case of assessment and the processor of previous year does not exceed 1 crore or primary adjustment is made in the previous year, financial year 2016-17 and the yearly assessment year. No repatriation or excess money of the associated enterprises deemed to be advanced. Where result of the primary adjustment to the transfer pricing, there is an increase in total income, reducing the loss of the case may be assessing excess money or part, therefore, the case may be therefore available. It's associated enterprises. Is not a repatriate in India within the time that has been prescribed shall be deemed to be advanced and as associated enterprises and the interest of the owners shall be computed in the income of the C and the present manner. Such excess money apart therefore is a repatriate from any of the associated enterprises or as which is a restricted of excess money means difference between when prices determined and prime adjustment and the price which is international transactions are actually taken place. Plan price of prime adjustment minus actual value of international transactions equal to excess money. Time limit for repatriate of the excess money or part therefore. Rule 10CB prescribes the time limit for repatriation of excess money or part therefore adheres to between 90 days from the date of such columns and the case mentioned the column or table the period in which interest is chargeable on excess money and therefore not a repatriate such case income. When a primary adjustment is a transfer of price has been made sudo motu by the assessee of return of income. Due date of filing the return is the date and period is the due date of file section 131. Case and date and period. If the prior adjustment of transfer pricing is determined in order to assessing officer or the appearance authority has been accepted by the assessee. Date is the date of said order, period is date of the said order period. The primary adjustment to transfer price is determined on advance pricing agreement and entered into by the assessing under section 92CC in respect to the previous year. If the advance transfer pricing has been entered into on before the due date of filing the return of relevant previous year, date of filing the return under section 139, the due date of filing the return is 139. If an assessment year has been entered into by or by after the due date of filing the return of the relevant previous year, so yeah, period is end of the month of which assessment year has been entered it, and is end of the month in which advance transfer pricing has been entered. Where the option has been exercised by the assessing as per the safe harbor rules under section 92CB. Due date of the filing return 139. Period due date of filing return 139. Where the primary adjustment is to transfer pricing is determined, resolutions arrived on order of mutual agreement procedure. TTA has been entered in the 1998. Period date of given effect by the assessing officer 9 for HS resolution. Period is date of the giving effect of by the AO. Result of 44 has to the resolution. And the rate of interest purpose of computation of the income and the excess money part of the report is also reported within the prescribed time. The rule 10CB2 prescribe the rate at which per annum interest income shall be computed in the case of failure to repatriate the excess money or money therefore above the time limit. The interest will be computed the rates mentioned by the column 3 in respect of the column cases mentioned in the column timetable. One case where the international transaction is denominated in the Indian rupee rate in 1 year marginal cost of fund lending to rate of SBI of 1st April relevant to previous year plus 3.25%. In the case where the international transaction denominated in foreign currency, at least 6-month London interbank offered rate LIBOR on 30th September of the relevant previous year plus the 3%. Note in the case of the exchange rate to calculate the value of international transaction denominated by the foreign country shall be telegraphic transfer buying rate on each currency and the last date of the previous year in which international transaction is undertaken. Option in buying the additional income tax if the excess money is not repatriated. In the case where the excess money period which not been repatriated within the prescribed time limit, as mentioned above, assessee has option to pay additional income tax and that is 20.9664. That is 18%, 80 taxes 18%, such as 12% plus 4% says as any excess money or therefore as an additional income tax in the said period was the has not been required to be made in second adjustment or computing interest from the date of period of such tax. This implies it would, as the case may be required by computing income upon the date of the payment of which is additional tax. The additional income tax so paid by the assessee shall be treated and the final payment of tax respect to the excess money, and therefore repatriate no further credit would be allowed assessee to other person respect to the amount of additional income tax paid. Further, there is no reduction respect to the amount in which additional income tax has been paid or would be allowed to be paid in the provision of the Act. Illustration 9. On the 1st April 2003, PQR Limited Indian company advanced loan of 6 crores to XYZ Limited. The company resident in Singapore. On the other day, the book's value of the total asset of the XYZ is 10 crores and they pay the entire loan along with the interest therein 31st August. During the financial year 2024, PQR Limited has entered into agreement with the XYZ that provide 20,000 medical equipment at the cost of 7,000 to over 500 unit. The assessing officer treated these associate enterprises he wants to recompute the income of PQR as an arm's length pricing. You are required to answer the following question. Would PQR explain the treated as associate enterprises for the purpose of transfer pricing as calculate the arm's length pricing? We sell the same equipment for 9,000 per unit while limited. A rate of 9,500 to XY LLP, both terms are unrelated party respect of PQR, and the PQR is not a wholesaler dealer. Where the option available to PQR Limited respect of the increase in transfer pricing, the income tax authorities in PQR Limited accept the transfer pricing. First question: the two enterprises deemed to be associate enterprises as 92A is a loan advance. One enterprises and other enterprises constitute not less than 51% of the total book value of the total asset, and other enterprises on other of the all total income during the previous year. If the PQR Limited Indian company advances loan on an account to 6 crores Limited Singapore Limited, that is 60% of the book value of the total asset, that is 60% of 10 crores, and PQR Limited and the actualism are deemed to be associate enterprises. PQR Limited sells the equipment at the rate of 9,000 per unit and Y Limited at 9,500 unit to the XY. Both of them are unrelated parties since the transaction has been considered as a comparable uncontrolled transaction for the purpose of determining the arm's length prices. The comparable uncontrolled prices method is used in appropriate method. Since the two parties determine the most appropriate method, the date set comprises only two entries. Arm's length prices shall be arithmetic mean of the both of the method. According to the arm's length prices 9,000 to 59,000 plus 9,500 divided by 2. Since the deviation between the arm's length prices and actual sale prices in the equipment of XY is unit, that is 7,400 per unit is 2,025%. As the far exceeds maximum percentile deviation, that is around arm's length prices would be 9250 per unit, and the total income increasing by 3.7 crores, that is 1850 into 20,000 units, that is 9250 minus 7,400. On account of the primary adjustment of 3.7 crores, that is 1850 and 20,000 units made by assessing officer, the total income of PQR Limited of previous year second adjustment has been made of 92 CE since the company has accepted the primary adjustment made by the assessing officer. Primary adjustment in respect of assessment in 2045 and primary adjustment exceeds 100 lakhs. According to the excess money, 3.7 crores available to Excel has repatriated to India within 90 days of the date of order of assessment year. Alternative PQR Limited can opt for pay alternative deduction income tax of 20.696%, 18 plus a charge 12%, 3.7 crores, amount to 77,57,568. The record to be maintained under Section 92D. Taxpayer undertaking international transaction with this associate enterprises has to compute the income, the expenses, and allocate the costs arising from the international transaction, having regard to arm's length prices. The substantiate the arms and prices the taxpayer is required to maintain the three-tier documents. The master file, local file, prescribed as D of the Act, country by country report as prescribed by Section 286 of the Act. The person responsible for keeping prescribed information documentation. Section 9 imposes responsibility for every person who enters into international transaction, keeps and maintains such information and documentation in respect to therefore has been prescribed. Being an constituted entity of international group or keep and maintain prescribed information and documentation in respect of international groups. The constitutional entity is required to keep and maintain information document respect of the fact whether or not international transaction is undertaken or such an enterprise constituted entity. The constituted entity has further information document to the authorized prescribed matter. Section 286 in Joint Commissioner designed by the PDGIT and DGIT system in prescribed manner on before prescribed date. Information document to be kept and maintained in prescribed period. The CBDT is empowered to prescribe the period in which information and documents shall be kept and maintained. An assessing officer, the commissioner empowered to require assessee entered into international transaction to furnish the prescribed information document. An assessing officer of the commissioner may, in the course of the proceeding under the Income Tax Act, require any person who is entering into international transaction to furnish any of the proceeding information document within a period of 10 days. Need of receipt notice issue the record. The requested period may, on the request of the extended further periods not exceeding 30 days, from the assessing officer or commissioner appeal. Information to be kept and maintained. Section 92D, Rule 10D. Records to be maintained. The Rule 10D provides the information and documentation to be kept and maintained by the assessing under Section 92D under the rule and following information and documentation to be maintained. The description of the ownership structure of the assessee enterprises, the details of the shares and other ownership interests held by other enterprises. The profit of multinational groups in which assessee enterprises part, therefore, the name and address and legal status of the countries, tax residence of each of the enterprises, compare the group of with international transaction has been entered into by the assessee, ownership and the linkage among them. The broad description of the business of the assessee and the industry in which assessee is operates and the business of the associate enterprises to whom the assessee has been assigned. The nature of the term, including prices, international transaction enter into and with the associated enterprises. The details of the property, transfer services provided and quantum of any other value, such as the transaction of class of transaction, such as transaction. Description of the function problems. The risk associated and assets employed or employed by the assessee by the associate enterprises involved in international transaction. Record of the economic market analysis, forecast, budget, any of the business enterprises prepared by the assessee for the business, whole of its divisions, projects separately, which may be bearing the international transaction entered into the assessee. Record of uncontrolled transaction taken into account of analyzing the comparability of the international transaction entered into, and being a record of the nature, terms, and conditions relating to the uncontrolled transaction of the third parties, which may be relevant to the period of international transaction. The record of analyzing, performing, evaluating comparability, uncontrolled transaction with the relevant international transaction. Prescribed method and consideration determine the arm's length prices in relation to the international transaction. The class of transaction methods selecting most of the appropriate method for the explanation to why the method is so selected and how such method is applied in the case. A record of the actual work carried out by the determining the arm's length prices, including details of comparable data and financial information used to be applied the most appropriate method. Adjustment, if any, which mean taking account of difference between international transaction or comparable uncontrolled transaction between the enterprise and owning such a transaction. Assumption policies and price of measured, if any, would mean crucial affect the determination of arm's length prices. Detail of the adjustment. If any have been made, the transfer pricing to align with the arm's length transaction, determining the income tax rules and consequent adjustment made by the total income of the tax purpose. Any other information, data, documents, including information or date regarding to the associate enterprises as may be relevant to determining the armament prices. A threshold of maintenance of prescribed information documentation rule 10 10D provides that case of the aggregate value of international transaction does not exceed 1 crore. It will not be obligated for the associate to maintain the above information documents. However, provided the above the case for the associate has no substantiate the income arising from international transaction with associate enterprises and disclosure of the account according to the section 920. This would be mean even the aggregate value of the international transaction is less than 1 crore. Assessee will have to maintain adequate records evident to show that international transactions of the associate enterprises are on the basis of arm's length basis. Information to be supported by the authenticated documentation 10D3. The information to be maintained by the assessee as supporting the authenticated documentation included the official publication, official report, official studies, official data sales of the from the government of the country and residents of the associated enterprises or any other country. The report of the market research studies carried out and technical publication borrowed by the institution are national and international repute. Price publications including stock exchange, commodity market quotation, published accounts, account statements related to business affairs of the associate enterprises, agreement of the contracts entered into the associate enterprises or unrelated enterprises respective transactions similar to international transaction. Letter of other consequence documentation time negotiation between the associate and associate enterprises. And document is normally issued in connection with the various transactions under the accounting practices following. In the case of provided information, any documentation to be maintained under the contemporaneous will be exist data and specific data. Meaning of specific data, date on which 1 month prior to the due date of further return in condition 139 of the relevant assessment year 31 October for relevant assessment year. In the case of international transaction which continue to have an effect of more than one financial year, fresh documentation will not be required to maintain each year. If there is no significant changes that would be affect the denomination of an armed prices. Along with the different informations and documentation required to be maintained for the period of 8 years at the end of the relevant assessment year. Audit report section 92E. Section 92E, every person who entered into international transaction during the previous year required to obtain from chartered accountant financial report under the specified date of financial report. Rule 10E, provided auditor report shall be formed to number 3 CEB, requires auditor to state that has examined the accounts and record of the assessee relating to international transaction entered into by the assessee during the relevant year. He has given the opinion that the prescribed information and documentation relating to the above transaction has been kept by the assessee. Further has been stated that the particular states annexed to be report of true and correct, annexed to parts. The part A of annexure, general information of assessee, name, assessee, address of assessee, PAN, other nature of the business are required to be reported. Part B of the annexure, the particulars of the international transactions are required to be stated. Boarded that particulars including a list of associate enterprises, particular design, transaction, and intangible property, particulars in respect of lending, borrowing money, particulars deemed to be international transaction. In the part C of the annexure, the particulars are relating to the list of associate enterprises to whom assessee has entered into specified domestic transaction. The particulars of the respective transaction, the nature of transfer or acquisition of the price, goods and services are required to be reported. Specified date means 1 month prior to the date of the furnished return of the income. Section 131 relevant assessment year. The due date for filing the transfer pricing. Reproduction 92 Form 3EC 3CEB and the 31st October assessment year. Power of assessment officer. Section 92C3 gives a powers assessing officer to determine the arms and prices under the following circumstances. Also empowers assessing officer to recompute the total income of the assessee having and required arm length prices are determined by them. It also provides the reduction of section 10AA chapter 6A shall be allowed for the additional income computed by him. For example, the total income declared by the assessee for the return of the income say 7 lakhs. A total income computed by the assessing officer applying the arm length pricing is 9 lakhs. Different 2 lakhs will not qualify for reduction section 10AA chapter 6A. The assessing officer may invoke the power for determining the online prices if during the course of the proceeding he has the opinion that on the basis of the material information or documentation process, the price change or the paid on international transaction has not been determined according to section 92C1 or 92C2. The information and documentation relating to the international transaction have not been kept and maintained by the SSC according to the provision contained in section 92CT and rules therefore result in 10D. And the information and the date of such a computation of online prices is not reliable or correct. SSC has failed to furnish within specified information documentation with required to be furnished or noticed as issued by section 920. Before invoking the power of determining arm's prices, opportunity being heard in the given SSC section provision 92C provides that if the total income of the raised prices is computed under the section and determine the arm's prices and paid and another associated enterprises, the taxes deducted and deducted also income of the associated enterprise shall not be recomputed on that count. For example, A Limited paid royalty to B Limited on resident 10% of sale of the tax source. And B Limited cannot claim the refund if the assessing officer has determined 8% of the online price in the case of A Limited and disallowing 2% royalty amount.